Hello and welcome to Markets Today. I'm Lata Venkatesh. Joining me from the New Delhi News Centre is Surabhi Upadhyay. Well, this is the fourth day running that the markets have exhibited the same strain of overvaluation, PE being too high on the one hand and earnings not being high enough on the other. So the dichotomy is stretching as the market sees no further good news, budget, rate cut, all discounted, and what we are staring at is an earnings season that may not be very good. So markets selling off. The point now is to see when the sell-off will find a floor. Hi, Surabhi.
Hi, Lata. Yes, second day running this week and the color continues to be red. Lots to talk about over the next half an hour. Let's start with the headlines. The sell-off continues on Dalal Street with markets seeing a volatile day of trade. The Nifty breaches the 8,700 mark intraday, finally closing just above it. The Sensex loses 0.5% as well. Real estate, oil and gas and power stocks lead the declines.
Telecom stocks surge in a weak market on hopes that bidding aggression has tapered off in the spectrum auctions. Bharti Airtel surges 7%, Reliance Communications and Idea gain as well.
Mid-caps outperform blue chips with the mid-cap index closing flat. Natco Pharma gains 7% on a favorable US court ruling. Monat Ispat continues to build on yesterday's gains, but infra plays like Hindustan Construction and Pipavav Defence continue to see pressure today.
And JSPL loses over 2% as CNBC TV 18 learns from sources that the government could look at re-auctioning some Phase 1 coal blocks to derive better value. Gare Palma 4/1, 4/2 and 3 and Marki Mangli blocks may see re-auction. Well, those are some of the headlines from the street, and here are the experts that we have lined up on the show for you today. Market perspective from Andrew Holland of Ambit Capital, Sugato Sen of CM, that is the Automobile Manufacturers Association, will give us his outlook for the auto sector. We'll also get you some global opinion from Richard Gibbs of Macquarie Securities.
So all that opinion coming your way, but let's start with the action on the street itself. The sell-off continued on Dalal Street after sharp losses yesterday. Markets tumbled once again today. The bulls did try to put up a fight. Anuj Singhal is here with the day's trading highlights. Anuj, what should investors take away from today's trade? Is there any heart from the late recovery that we saw?
Well, that was a bit like tail-ender slogging, making sure that you get a respectable score. The start was quite okay, then there was a mid-innings collapse, but the late slogging meant that at least 8,700 was defended. But it was volatile. It was that kind of a market in which money-making was too tough intraday because of the sharp moves that you had. But suffice to say that this market is showing signs of weakness where every rally is being sold into, and that is something that you saw today as well. Though you have to make one point, HDFC alone dragged the market by 25 points. So there was weakness because of one large stock. But even then, the market is showing signs of some bit of weakness. Let's talk about some of the stocks, in fact, that dragged the market. As I said, HDFC alone dragging the Nifty by 25 points. Then you had Lever that corrected today, down 2%, and Reliance was down 1%. Metal stocks, they sold off in trade today. Jindal Steel, Hindalco, Tata Steel, all of them down between 1 to 2% in trade. Some other prominent Nifty losers included stocks like Cairn, that was down about close to 1.5%. Profit booking in Ambuja down 1.5%, and SBI was down about 1%. There were some gainers though in trade today. Bharti Airtel was one of the stocks of the day, up about 7% on that one. Coal India up 4%, and Mahindra was up close to 2%. Finally, in the mid-cap side, some of the high beta stocks took a bit of knock. Adani Power is now down 14% for the week. That was down 5% today. Nitesh Estates corrected, down 7%. And Pipavav Defence, third day running, the stock was down about 4%. And some mid-cap gainers in trade today. Wockhardt, what stunning move on that one, was the top traded stock in the F&O market today, was up 4%. ABG Shipyard was up 13%, and Monat Ispat was up about 8.5%. So the battle for 8,700 is still on. The bulls have defended that mark for now, but the market is looking a bit weak inherently, and the bank Nifty is the key to watch out for now.
Yes, actually the weakness was all over the place, as Anuj rightly put it, across the board. It wasn't just the HDFC variety of stocks. You had, say, JSPL for specific reasons, DLF, Hindalco, HUL. The top 5 losers were really of all categories. So it wasn't as if anyone escaped the blushes. Maybe pharma was the only place to hide. Another point to note is that we're also seeing this fall come in the backdrop of a lot of global selling. Emerging market currencies have seen a huge beating with the dollar rallying in 2015. Some of the currencies like Brazil or Indonesia have lost 5-6%. So there's seminal weakness in several risk assets, if you please. Likewise, there isn't much to speak about, the way the European markets have fared over the last 24 hours. Asian markets have shown weakness. The Chinese data, the inflation data, though marginally higher than expected, continued to show that the producer prices were weak. Job creation was weak. So there is, you can say, in a sense, a lot of global weakness as well. And you can see that in the commodities, currencies and equities market as well.
Okay, then let's move on to some market perspective. On that note, Andrew Holland of Ambit Capital expects the markets to move lower in the near term. He says that many factors can take the Nifty below 8,500, and he doesn't see the index scaling back above 9,000 anytime soon.
There could be a number of factors that could take us below that. The 8,000 to 8,500, 9,000 range is that there's nothing more untoward, both in India and globally. I think 9,000 was a push. You had all the favourable factors of a good budget, the RBI cutting interest rates by another 25 basis points. And I said, with a P of 17, you really now have to buy time until earnings start to catch up. I don't know where the earnings growth is going to come from. So I'm really saying at the moment that on a P of 17, I don't see any further PE expansion for the markets. I think it's more in terms of where you think the market's going, and I think the market's probably heading lower in the near term. And if global factors, come and scare us a little more, then obviously we could see a lot lower levels than we have today.
All right, so some caution out there. Now for all the action today itself from the futures and options space, let's go across to Nigel D'Souza.
Well, in the derivatives market, as has been seen in the last couple of days, call writing is making you money and put buying as well was making you money. But in today's trading session, the Nifty ended down by close to around 40 points. So call writing made you money yet again. The 9,000 call is being written at will. The premium over there fell from around 37 bucks to 30 rupees. The 8,800 call as well is being aggressively written. So the premium over there fell from around 105 rupees all the way to around 94 rupees by the time we wound up. So in the near term, that 8,900 level will become a very, very firm resistance for the Nifty. But importantly, now it seems that the Nifty is forming some kind of base at around that 8,600, 8,700 odd mark. Because in today's trading session, though the Nifty ended down by close to around 40 points, the 8,400 put as well as the 8,500 put, take a look at both those two strikes. The premium didn't go up. So that's telling you that's riding at the lower levels, and in fact we could see some kind of a base at around that 8,600 odd mark. Now importantly, in today's trading session, some of those stocks were getting shorted. So something like a DLF did see big shorting pressure in today's trade. It was down by close to around 4%. But Bharti Airtel did see big buying, a big open interest build up as well. Is seen on that stock. It ended higher by more than 6%. Ashok Leyland has been a bit of a star the last a few months. In fact, that one saw buying even in a weak market. That one was higher by close to around 3%. Titan as well, after the big correction we have seen, that one saw some renewed buying today. It was higher by close to around 1.5%. Open interest build up as well, telling you there was some fresh buying that was seen in that counter. HDI did come in for a short covering bounce, while Adani Power for the secondary running, the stock was lower. Trade was down by close to around 3%, but it appears there was more unwinding of long positions. And finally, GMR Infra did see aggressive shorts getting built into that stock.
All right, Nigel, thank you so much for that. Let's move on to the other pocket of the market that was extremely active. Telecom stocks rallied quite sharply today, with Bharti Airtel surging almost 8% as Spectrum auctions reached their last leg. Reema Tendulkar is now joining in with her analysis on the stock impact. Reema, what sense have you made of the kind of bidding we've seen?
Thanks so much for that. Telecom operators saw a relief rally today as CNBC TV 18 reported that the telecom auctions have entered their last leg and bidding has actually come to an end in the 900 megahertz spectrum. If that were true, that actually comes as a big relief for all the telecom operators, because already, as of yesterday, the bid price in the 900 megahertz was at a 78% premium to the reserve price. That's already very high. And had it gone on for the next few days, we would have only seen a jump in this, bid value, and that would have increased the burden for all the telecom operators. So we've likely seen a bit of a relief rally, that the auctions have come to an end, and maybe there was a bit of short covering as well.
All right, thanks a lot for that, Reema. The second round of coal auctions have drawn to a close as well, and the government has managed to rake in big bucks. But a cloud hangs over 3 coal blocks. These include the Gari Palma 4-1 block backed by Balco, the Gari Palma 4-2 and 4/3. Those were won by JSPL, and the Marki Mangli 3 block that was acquired by Ispat. All these blocks have been sent for a re-examination, and now government sources say the centre could consider a re-auction.
All right, let's move on from the coal space to the auto sector. It could be gloomy days ahead. That's the forecast from SIAM. At best, the auto industry, the auto body expects to see a single-digit growth for passenger vehicles and motorcycles in FY16. SIAM expects passenger vehicle sales to grow by just 6 to 8% and motorcycle sales to grow by 6 to 7% in FY16. The industry body, however, expects demand for scooters and small commercial vehicles to pick up once rural areas get money via government welfare schemes. Let's now hear out Sugato Sen, the Deputy Director General of SIAM.
What we have been doing is we are organizing something called a looking ahead conclave, where we invite various consulting companies and various financial analysts and others, where they talk about what could be the market in the future. And based on that, we have found that people are talking about around 6 to 8% growth for passenger vehicles in the coming financial year. And that is what we are keeping as our sort of a base target. And if we cross that, we will be more happy. At least we should be doing 6 to 8% in the coming financial year.
Right, it's not just the auto sector that's gloomy. There's gloom in the global arena as well. Investor pessimism and dollar strength continue to put pressure on emerging markets, and that's been adding to concerns. And what's adding to concerns is the imminent rate hike by the Federal Reserve. Here are some global voices on where they see global equity markets going ahead.
Well, I don't think we should worry too much. I think there's going to continue to be a lot of liquidity out there, as you say. The central banks printing money at an increasing rate once again. We've had a number of further interest rate reductions, and of course this week the European Central Bank has begun its quantitative easing bond purchasing measures. So that's all adding to the momentum in the economy. We've got, of course, economies like India who are benefiting from that tailwind of the lower oil prices and improvement in their terms of trade. Obviously, inflation outcomes are much better. They've joined the low inflation economies in the world now. And as a consequence, interest rate relief. So that's looking good. And India has actually, as you now know, on growth momentum, surpassed China.
The U.S. Treasury market is driven by many other factors than monetary policy expectations, whereas the dollar right now is on a strong rise simply because global investors fear the message from the Fed, and that Fed is going to meet again on the 18th of March, and that's the key event for global markets this month.
All right, time for a break on that note, but coming up next, more market talk. We'll also be getting you some trading ideas.